Hi and welcome to the FinancialFox. Today I'm interviewing a very special guest. His name is Philipp Pieper and he's the CEO and co-founder of Swarm Fund, the open infrastructure for digital securities and the first private equity blockchain fund. Swarm Fund is an open source, fully regulated platform for scalable crypto investment, basically a decentralized capital marketplace that democratizes investment in crypto security assets, offering a fully compliant and legal infrastructure. That might seem a little bit complicated, so best to talk to Philipp, who is here with me in the studio, and will explain things a little bit better. Hi Philipp, how are you?
I'm well, how are you?
I'm fine, thank you very much. Could you maybe give us a brief overview of Swarm?
So we are a project that has been around for a couple of years, and we started by doing something called asset-backed securities. We were convinced that the market in crypto and blockchain needed things that are backed by real balance sheets and cash flows to actually professionalize as a market. And then we went down the path of actually building an infrastructure that was able to do that. And it's a mixture of a legal framework, a governance framework, but also then the technical infrastructure, how to actually sort of do this in a controlled and regulatory compliant way. And we've had some early successes by actually going into the market earlier this year with focusing on tokenizing LP positions in funds, so taking a very illiquid asset class and making that into something that people can buy into that normally don't have access to these opportunities. Then we moved to actually tokenize certain secondaries of big tech companies. And today, and we just launched last week, actually sort of in a art-backed token. So this was actually a token that is focused on contemporary photography being backed behind the token. And it shows that the success of that token shows that actually there is a desire in the market by certain investor groups, whether it's family offices or private banks or some retail investors, to buy into these things in a more flexible way. So we're talking today more about the fact that it's a digital security and less a sort of a token infrastructure. And by digitizing securities, you're just much more flexible. You have a higher degree of control over what's happening, and it just happens to be just a replication of a digital realm that works better for investors as well as for the opportunities.
Okay, so Swarm protocol basically facilitates trading of digital security, as you said, not tokens, as well as verifying the security, the investor and their wallet. Maybe can you explain a little bit about how this protocol works and also what are the entry requirements?
So first of all, we don't do the trading. So that we've always committed that we are building open source tools that actually can help the token issuer, which means that the token issuer in this case is the company that actually has the underlying asset that is digitizing their security. And they need a huge amount of degree of control in order to succeed in the market and actually have a counterparty on the regulatory side to satisfy. So the liquidity is being done by others. So it's going to be done by exchanges that are locally licensed, by either financial exchanges or crypto exchanges, but these are other organizations that we're not part of. We are there to actually sort of give this almost for free into the market, because we believe that the convincing story here is that there's an efficiency gain for people, that it's much cheaper to actually host and maintain these digital securities online. And then there's the big story of liquidity, which means that by actually taking something that is normally doesn't have a market, an accessible market, and putting it into a market infrastructure that suddenly can actually be traded, you're actually increasing the value of the asset quite significantly, because it actually just has a better access. It could be packaged up in a different way with investors, and investors don't have the commitment that they have to do for a long period of time, but they can go in and out of the asset in certain degrees of freedom.
Okay, but I think one of the key challenge is definitely compliance, and then we have got scalability. But let's go back to your infrastructure. I mean, you're saying it's fully regulated and compliant. Can you maybe explain a little bit better?
So we empower the token issuer, which means that our infrastructure, it's actually operated on a decentralized infrastructure. We started off by building our own blockchain that is a trial version of our processes. it's basically the transfers that have to happen have to be sanctioned by the token issuer. So it's all about transfer restrictions. And transfer restrictions contain, if I hold a security and I want to transfer it to you, from a token issuer's perspective, I need to make sure that you're qualified to hold that security, right? So I need to know who you are, so the KYC, I need to know where your funds come from, the AML, and then I also have certain other restrictions. Maybe it's sophisticated investor qualification that I need to hold true to. So the entry points into this ecosystem have to be defined with a qualification. We as Swarm did that initially, but we're now opening that up actually for others to do that as well, and opening up their qualified investor pools to be traded against security tokens. So the protocol is built as a privacy-safe infrastructure where people can come transact with one another in a trustless way, so they know for sure that someone on the other end is someone that should be transacting on it. But we as a nonprofit organization are not in control here. We are basically opening this up as an infrastructure for others to use, but we're not the operator of that.
Okay, how are investment opportunities selected on your platform?
So we started off with a hypothesis which we formulated in a white paper in the end of 2000 or beginning of 2017. We were convinced that we're looking at investment opportunities that have a certain degree of sophistication, a certain state, a certain known parameter of KPIs. And so we did that initially as our own curation because we wanted to trial in markets that we felt were compelling to this ecosystem. Now that we've actually sort of trialed these processes, again, we're opening this up. It becomes a permissionless infrastructure that anyone can use. So, you can see certain degrees of high degree of public securities that might be traded on it. It could be that it's more commodities, or it could be going down to cap tables of companies, whether big or small companies, that could actually be managed on this as well.
And then you have those experts on your platform. They basically have a key role because investors can follow them, can co-invest with them. What is basically their influence and also their profile?
So you're talking about the syndicate leaders, right?
Yes.
So we were convinced that we're revolutionizing a lot on the upper end, meaning sort of there's a digital security, all the processes around it. We didn't necessarily want to restructure and reinvent the investment process. So it's been proven over time that actually sort of there's individuals that have certain qualifications of deal access, certain qualifications to judge certain verticals, that just have a vertical knowledge of the space that they're in. So we chose to actually, we chose to actually sort of back individuals that are actually sort of using these tools to then invest into underlying assets. So mostly that's why we started with tokenizing funds. Those are fund structures. Those are existing funds with track record that have their existing business cut out for them. And so that was great because it left the community with a high degree of confidence that those are the individuals that have done something in the past successful that just continue to do that sort of going forward. There's another aspect of maybe what you're referring to, that there's a lot of trust that we need to generate to a anonymous investor coming in terms of information, who are the opportunities, giving confidence that this is the truthful core of information that describes the opportunity. So we're building a lot of infrastructure into this infrastructure that allows for a verified information base to be there and to be a reference database that can be verified that it's really coming from the opportunity, in order to not be sort of, subject to scams and sort of being misled by misinformation.
Can you tell maybe a little bit about your token model?
So we have basically as an underlying token, we have the Swarm token. The Swarm token is a utility token. You can think of it more like a payment token for a AWS for fund operations. So this infrastructure basically, we don't take the fees, but the token is being used to stake certain things on the network. So we have an underlying masternode network that operates the infrastructure. They have certain stakes that they have to put in. Then if a fund comes and actually has a certain value that they're projecting onto this infrastructure, they also have to stake something on this infrastructure. So it's actually built in a way that these market participants transact with one another, beyond just the staking portion. But we as a nonprofit, we're not recipient of any of those fees. So quite to the contrary. We want to make it and incentivize every participant to actually make this as cheap as possible and potentially even free down the road.
So picking up on that, how Swarm Fund makes money?
We don't. We actually have, we raised money for being a nonprofit organization. We have a certain degree of budget. We also hold a certain portion of the token, the utility token, which actually gets more valuable with the higher degree of adoption of the infrastructure. So I think from a budgeting perspective, we're pretty fine there. And at some point in time, the free infrastructure might be built and just exist. There's components on top of that we as an organization could eye to do for-profit activity for, but that's further down the road. We're not even close to being sort of engaged in that yet.
Okay, so your platform has been live since January 2018 and is still in development, from what I understand. So what is next?
So I've been in enterprise software for quite some time. You know, and partner Timo has built a number of companies in the financial or the fintech space. We knew all along that you can't just throw tools out there and assume that they're going to be used. So that's why we chose this very controlled approach, saying, okay, here's how we're going about this in a fairly centralized fashion, with using blockchain tools, but they weren't distributed until August of this year, where we actually sort of put them out through masternodes into the public community. The same thing is now going to happen with every piece of our stack. So before we were sort of trialing ourselves how we use our own dog food, discovering along the way what works, what doesn't work, finding the elements of what is necessary to be put in place to make a successful investment happen. And that sort of accumulated in the art token that we actually launched last week, and that showed the success was different than actually it was before. And it's not just a sign of the market. So what's next is that we're going to retract even further from these processes, meaning that all these tools are going to be opened up, that people that have a securitization service angle, they can take the tools, they can use them, but don't have to ask permission from us to use them. So I think that's an exciting next step, because it's in this whole phase of actually where digital securities becomes a real thing in the market, where the financial markets are trying to find that next way of efficiency gain. We're providing it's sort of like Android, we're providing an operating system by which people can build their tools and apps on top of it, and know that it's actually not done by someone who can disintermediate them as well, because we're a nonprofit.
Yeah, and I come back to the point about scalability that I was making before. How easy, how difficult is that?
Well, so core to that question is actually that we are convinced that local service providers and local operators know more about their local markets than any one organization can do across 60 different markets, right? So we have investors from 60 different markets. We didn't qualify them because we don't know what certain legislations require, but what we have service providers that help us do that. The same will happen on the securitization side. So people that from Singapore come in, that they have service organizations, they are in contact with the local authorities, regulatory authorities. They can customize the infrastructure to meet the demands of the local authorities, and then own the control over what's happening with their digital securities out there. So we believe that that's a more promising recipe for scaling, because you're not trying to replicate all these different competencies into one organization, which would take a long time to actually replicate.
And that's come back to, you have been recently in the news for the association with the Open Finance Network to list all the Swarm token. So because the OFN is building the first US-based regulated security token trading platform, do you think that could be a key element for Swarm to extend its reach in the US market?
It's one example of an exchange that will be out there, but it's not the only one. So again, we believe that there's different liquidity pools that we are tapping into, that we're helping not just our own token holders, but other token holders connect to. But there's a core challenge in today's market concept, where the token issuer and the exchange have to synchronize up in some way on who's trading on all these securities, right? So it's not just the licensing of the exchange itself, but it's also how do you actually maintain and operate a permitted realm of users that is able to trade on this. So open finance is one of the first examples of an adoption in the U.S. market of the standard that we've developed with the Market Access Protocol. But there's going to be others that are going to adopt the same thing. And we're working in different markets with locally regulated exchanges to bring the same kind of solution to bear. So as much as today, the securities exchanges don't exist yet for security tokens or for digital securities, it's going to look very differently in 3 to 6 months' time.
And I think you are also doing quite a lot of work in Europe as well.
Yes.
I mean, the company started in Silicon Valley, but now you move back
Yes.
to Berlin. And how is looking the European market?
So there's a couple of angles that actually excited us really well about Europe. It's obviously you have a European EU 27 market, which is a fairly homogeneous market. You have regulators within those regions that actually have a very constructive view on blockchain and the opportunities that result of it, and are not just reacting in a negative way, but in a very constructive way, forward-leaning. And then we have this very interesting fabric of Switzerland being in the middle of it, Liechtenstein, and smaller regulatory environments like Liechtenstein that actually are obviously faster in the decision making, what they want to make of it, and capturing more opportunities. So we felt that it was time to spend more time in those environments and actually sort of deliver a blueprint that regulators can take a look at, that they can actually sort of verify that this is something that they think could fulfill their requirements. And it's a much better approach in our view than actually saying, well, regulator, tell me what you think should be done, but rather have them react to a solution that possibly sort of is built with other people that they're trusting and have known for years.
Okay, last question. Something that caught my attention is the mention of AI on your website applied to investment opportunities. Can you maybe expand a little bit more about how you're thinking artificial intelligence apply to digital securities?
So we're making the first step by sort of, and this is not AI, but we're taking sort of these securities and we're replicating them into a smart contract environment, right? And it doesn't have to be Ethereum; it could be any kind of blockchain that these assets exist in. So once you have, a fundraising mechanism with stable coins, with actually assets being on the same programming language, you can actually create all sorts of synthetic products and a lot more flexibility in changing these products and building customer-focused services for the investor. And we're going to see a lot of language, not that Swarm is going to be doing this, but there's going to be a lot of people that are working towards that goal to actually use that structure in a more flexible way. You can do programming of securities and as assets that so far hasn't been possible in the financial markets, or it took a lengthy process to actually get these synthetic products in place. So the result is that I, as an investor, I will have much more powerful tools at my disposal that will service me individually from a perspective of actually sort of my benefits, and not for the perspective of actually an intermediary actually sort of benefiting from it.
Okay, so all very interesting, a very busy couple of months ahead. So thank you very much, Philipp. I look forward to having you back in the studio for an update on Swarm.
Thank you so
very
much.
much.
Hey,
Thanks.
good to see you.
Thanks. This is everything from the Financial Fox. Thank you very much. See you next time.